Welcome to ECNTRADE Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. After 5 consecutive losing days, or bearish days, the market has managed to turn around after posting an inverted hammer and now looks towards the 60-day moving average, which is around 67.75 to 68 cents. Along with that is C major, as the break above here could reinstate a strong bull case that may ignite a rally up to 70 cents. So keep an eye on this level around 67.75 to 68 cents. In the meantime, if we do see a rejection, it was slightly hesitant towards the end of March, but we might see a pullback towards the support level at 66, 60, 80. In economic news, the market was somewhat surprised and found a bit of a boost for the Australian dollar after the reaction to an upbeat domestic employment figures that were released earlier by the Australian Bureau of Statistics, which showed the Australian jobless rate holding near a 50-year low after easing from 3.6 to 3.5%, while the number of employed people rose by 53,000 in March, more than the 20,000 expected. From the upbeat figure, the market has now started pricing in a possibility of a 25 base point rate hike at the next meeting, which is in May. The euro somewhat bullish after the dollar slipped further following a mixed reaction to the US Fed minutes and also the inflation data. The minutes from the US Federal Reserve March policy meeting showed several members of the US Federal Open Market Committee, or the FOMC, had concerns about the regional bank liquidity crisis, while also adding that the US economy might fall into a mild recession later this year. Presently, global markets have priced in around 70% likelihood of another quarter-point interest rate hike at its conclusion of the FOMC's policy meeting next month. Following that, the closely watched inflation report was slightly cooler than expected in March after the US Labor Department said that the Consumer Price Index that measures inflation showed headline and core CPI March rose by 0.1% on month, missing the forecast of rising 0.2%, while year-over-year basis, the headline rose to 5% against a 5.2 rise. Based on the technicals now, looking at the market, with the dollar index hovering above the 100.70 area, is that we're looking for the euro to rally on to 110.20.25, maybe even to 110.65.75, and reassess from there, as we could get a strong rejection and see a pullback somewhere around the 108.50.80 area. The dollar yen, well, the market's posted an engulfing candle and now giving some concern that we could see a pullback to 132.80 or 132.55. But overall, I'm not going to abandon the top side call to 134.80.90 as of yet. Sterling, meanwhile, is pushing on back to the 10-month highs around 125 as it looks towards 125.65 as a target. Be a little bit cautious there because the MACD is a little bit weak, so we could get a rejection and see a pullback towards the lower side of 124. As you can see, all eyes are looking towards this top side for gold, which is around 2,032 to 34, or maybe even up towards the weekly pattern that shows back in February 2022 of 2,064 to 72 area. Looking at the dailies, still a little bit of divergence here, and I would like to see this cleared. However, a close above 2034 would negate the bearish divergence and instead put those early 2022 highs at 2068.72 as a fresh objective. And wrapping up with oil, well, the market somewhat mixed, now reaching its objective. That was at 82.90 to around $83 a barrel. I'm a little bit concerned with this divergence that we could see a rejection and a significant downturn that could take the market back towards $80 a barrel. And with the risk of falling into a recession in the US, that would put a little bit of a dampener on any renewed rally. Well, that's a wrap for the day. Thank you very much for joining me. And as always, look out for the intraday report and I hope you enjoy the rest of the evening.